Hey yo, what's up traders? Welcome to the first episode of ZoneFlow Breakdown. I am John King and today we are breaking down a clean trade setup using my ZoneFlow strategy. ZoneFlow to the world, baby. Okay, we are looking at the pair of AUDCAD. Now when I'm analyzing, I start on the weekly, work my way down to the daily, and then the 4 hours for confirmation. Now what I do on the weekly time frames, I draw my zones, like areas of interest. I start drawing just to make this video short. As you can see, this is a weekly area of interest I indicated there, another weekly area of interest, and then another one weekly area of interest, and then that one, and then I move on to the daily, just to make sure that I've I have areas of interest on the daily as well. As you can see here, so I've indicated here the area of interest. This is a daily area of interest. Now for an area of interest to be legit or strong, I make sure that price has stepped into this area of interest at least three times. As you can see, wait, hold on. As you can see, price down here, price has been to this area a lot of times. 1, 2, sorry, 3, we're counting that also, 4, 5 times. So this is a legit area of interest. Now what I make sure is after drawing my area of interest, I go to the daily and just make sure that I draw a box, this box, just to make the area of interest big most, because you know price does not just come to an exact area of interest. It can just hit different spots of an area of interest. As you can see, price here would just here, it hit here, and then come to hit here, and then there. It's never really one exact area of interest. So I drew a box there to indicate that this whole area here, this whole area is an area of interest. Move on to the next one. That's what I did, also indicating that this one is also included, these ones are also included, this week also is also included. That's how I do it. And then from there, I don't move down to the 4-hour time frame, because I like my areas of interest to be strong. I don't like weak area of interest, and the higher the time frame, the stronger the area of interest. So what I do is, after drawing my area of interest, I move back to the 4-hour, not 4-hour, but the weekly time frame. Now I ask myself, is this price in an uptrend or downtrend? So you see, price was moving down, and then from here it just came up, created a new extreme. We don't say it's a high, because as you can see, the last high was up there, came back down. You know what? When it came back down, it created a new lower high. Instead of breaking that previous one, the one that went down, it created a new lower high. After creating a new lower high here, it came back up, breaking this previous lower high to then create a new higher high, showing that price is no more on a downtrend, but now on an uptrend. So what we are doing is, we are on a weekly time frame, and we will be looking for buys only, because price is on an uptrend now. The bulls have more power than the bears. So what we do from there, we don't just enter because of that. You need more confirmations. So what we do from there is we move on to the daily. What is the daily showing us? We do the same. We track the action of price. You see, it was creating lower highs. It was on a downfall. It was going down, but then as soon as it came here at this weekly area of interest, it shifted, came up, create that. It's not a high yet because it did not break this zone. Created that lower high. Lower high, came back up. Instead of breaking this lower low, it created a new lower high and signaling a head on and shoulder on a bullish head on shoulders. So now once it created that head, a beautiful head and shoulders, it went on to create a new high and then another new lower high. So now price is no more, or falling is no more bearish. It became bullish after this new extreme. Okay, so price moved on, created a new high there. New high. We don't really count the wicks, we count the bodies. Created a new high, came back down, created a new lower high. So price is still on the downfall, you see. So that was last week. So what we did is we knew that price was gonna come until this zone, because price is now on price is now on is now bullish. So we cannot just buy here. We wanted to make sure that price is at a specific zone, a nice zone where we can enter the markets, and this is what we did. So what we do is we make sure that we have only two or more time frames that are in sync, showing us the same thing, and there must not be a time frame that is saying otherwise in between. Like, let me say now we have weekly that is bullish and daily that is bullish. So we are focusing on the bullish side. We are buying because it is showing us that price on the weekly is bullish and price on the daily is bullish also. So whatever the 4 hours is telling us, we don't really mind, because we have two different time frames that are telling us the same. So what we did is we waited for price to come at a certain zone, whether it's daily or weekly area of interest. So that's what we did. We waited. But before waiting, we must first go down to the 4 hours just to confirm what the 4 hours was telling us. So the 4 hours was telling us that price was bearish. It was creating lower lows and high lows, lower lows and higher lows. But we didn't really mind on that, because we have the daily and the weekly time frames that are telling us that price is bullish. The bulls are strong, so we must only focus on the bulls. So we waited for price to come at a certain zone for us to enter. So here we are anticipating price to bounce off on this zone, but we didn't have a good entering setup, so we didn't enter there. And luckily we did not lose money there, because we could have lost a lot of money here, because we're anticipating for price to come to this zone. So we did not enter there, which is a good thing. We waited. This is a good thing about trading. You wait. Patience is the key. when you wait, you get clean and clear setups, and you don't lose money out of that through that. So what we did is we waited for price to come to a nice zone where it will give us a good entry setup. So what we do is when we are entering a position, we wait for that position on the 30 minutes time frame. That's where we enter our trades. 30 minutes time frame, that's where we always enter our trades. I tried other what is this? Other time frames, but sometimes it does not really work for me, especially the 15 time frame and 1 hour time frame. 15 time frame is full of what is this? It's full of fake outs. You might enter a trade thinking that price is moving up, but the next 15 minute candle is gonna tell you otherwise. So I lost a lot of money using the 15 time frame for entering. So once I started entering on the 30 minutes time frame, that's when I started making money. So what I did is I waited for price to come here. Price came all the way down here, and then I entered there at this nice Marubozu candlestick. I entered there waiting for price to move until the next zone. That's where I put my take profit. Hold on. At this zone, this is where I put my take profit, and my stop loss was a few pips below the zone. I make sure that I put my stop loss a few pips below the zone to make sure that price can come here, somewhere here, and it will not fake me out. Like, price has this tendency of hitting your stop loss and moving to your intended direction. So I entered the trade here at this Marubozu. Not really much of a drawdown, and then poof, it went to my take profit. It's that simple, guys. I don't really use indicators. I've tried all the indicators. They are ragging. I don't use indicators. The only indicators that I use are the EMAs, the 250 EMAs, and I don't use them for entering positions. I use them for direction. They show me the direction of the markets, not as a way of entering. So man, yeah, that's how I trade, and that's how I've been trading. I've been trading for 3 years now, but then I've only started being profitable last year. So the last 2 years I've been using this strategy, and I'm not gonna say it's a holy grail strategy. I have good days, I have bad days, but I can say it's 65 to 75% profitable. And I've been using this strategy. My group has been using this strategy because I have a community where I share signals and insights on trading in general. I give them signals. I have a free Telegram group for people that want to join. I have a free one, and I have a premium one where what is this? Members pay a few amount just to enter that Telegram. The good thing about the premium one is that I give more signals to them comparing to the free one. The free one I'm helping out because I know that they don't really have money to pay for full to pay for signals and education. So yeah, man, I'm helping out. So you can join our free Telegram. You can make money through us, and then if you want to, you can then pay to get that premium entry to the paid signals. Yeah, that's me, man. My name is John King. I'm a forex trader. I trade only forex. I don't trade gold. I don't trade whatever. If you want to, you can join my group. The link is down below here, and grow with us, man. ZoneFlow to the world.